Okay, we've got these two in-class problems that are very similar to homework problems. The first one is create just the operating activity section using the indirect method. And the second problem, you're asked to create the entire cash flow statement, again, using the indirect method. So first, and I've already got it marked up here, so I'm just going to kind of talk through it. First, we take our balance sheet and we find our increases and decreases. Again, make sure that you know which column is current year and which column is prior year. So you're properly doing the increases and the decreases. For example, accounts receivable started at 5,800 and ended at 5,600. So decreased by $200. We do that for all of these accounts. Now, we're not given a full balance sheet here. We would need a full balance sheet if we were doing the entire cash flow statement. But since we're doing just the operating activity section of the cash flow statement, we only need the accounts that are operating accounts. And that is the current assets and the current liabilities. So that's what we're given here, selected balance sheet accounts. Accounts receivable, inventory, accounts payable, salaries payable, utilities payable, prepaid insurance, and prepaid rent. And I've labeled each one of these as an A for asset or an L for liability, because we need that in step 2 when we're making those adjustments. Before we do that, though, let's look over at our income statement. So we're given a full income statement. And notice here, there isn't any kind of other gain or other loss. Everything is a straight up operating expense. So we take that bottom line net income number, and that is the top line, the start of the indirect method of our cash flow statement, of the operating activities section of the cash flow statement. And there's a tip for you, or a little hint. If you're looking at a cash flow statement and it doesn't say indirect method or direct method, and you're asked, which method is this cash flow statement using? Excuse me. Look at the top line. If the top line is net income, that means it's the indirect method. The indirect method always starts with net income. If you don't see net income in there anywhere, that means it's the direct method. The direct method does not use net income. Okay, indirect method, grab net income, it's the top line, $6,000. Step 1 is adjust for non-cash stuff. That's always going to be depreciation. So we subtracted out depreciation to get $6,000. We need to add back depreciation for this adjustment. Yes, Mary? Do you have something for me or no? So we start off with a $6,000 and we add back the depreciation. So that's this $12,000 right here. And that's all we have for non-cash. So now we can move to step 2. And step 2 is recording all of those increases and decreases. And keep in mind, yes, net income is always the top line of the indirect method. And keep in mind that sorry, I just want to make sure that everybody can hear me. Keep in mind that the liabilities, you're going to add an increase and subtract a decrease, but on the assets, it's going to be the opposite. You're going to subtract the increases and add the decreases. So I'm just going to work my way down. The decrease in accounts receivable of 200 gets added. The increase in inventory of 440 gets subtracted. The decrease in accounts payable, since that's a liability account, it gets subtracted. The increase in salaries payable, since that's a liability account, it gets subtracted. I mean, added. Increase in utilities payable, added. Now we're back to assets. Increase in prepaid rent gets subtracted. Another asset, decrease in prepaid insurance gets added. And that's it. We go 6,000 plus 12 plus 2 minus 440 minus 200 minus 1 or plus 180 plus 60 minus 40 plus 20 gets us the net change in operating activity is an increase of 17,780. And the second problem, that operating section is the toughest part of these cash flow statements. I think they are. I guess everybody's going to feel a little differently, but I think it's the most complex part and definitely the most calculations. So that's the first part we're going to do here. Now we've got this problem that they're asking us to do the complete cash flow statement, again using the indirect method. That's the only one we've learned. So we have the balance sheet, we go through and we find the increase or decrease for every one of those accounts. I've already got them out there. Remember, we don't do anything for the subtotals or the totals. We just want the accounts. I used colors. I think I've told y'all a couple of times I'm colorblind, so forgive me if I say the wrong colors, and I'm not even going to try and say them. But I use different colors for different things. Cash does not go into operating or investing or financing, so I gave it its own color. We're going to use that to proof. But the current assets and the current liabilities are operating, so I gave that one color. And everything else I gave another color. That's going to be financing and investing. And we can see that here if I just go through and label. Accounts receivable is operating. So is inventory. Equipment is investing. Accounts payable is operating. So is so is income tax payable. Common stock is financing. And paid in capital in excess is also. And then retained earnings, the dividend piece is going to be financing. So first, let's knock out the operating piece. For the asset side, we're going to subtract 12,000. We're going to subtract 75,000. We're going to add 16,000 and add 3,000. And don't forget, we're going to add 54,000 for depreciation. So that's here. Add the 54,000 for depreciation. Subtract the 12. Subtract the 75. Add the 16. That's this and this. Add the 16 and the 3. Add the 16 and the 3. There's our operating. Cash inflow of $122,000. And then we go look at our other pieces. So our equipment investing went up by 36,000. We look at our additional information. We bought equipment for $36,000 cash. That's going to be a cash outflow. That's our only I. So we go to the I section, and there it is. Cash outflow for equipment, $36,000. That's the only thing we have in I. So net cash for investing is an outflow of $36,000. And then we go look at financing. Financing, we can see that we've got common stock went up, excess paid in capital went up, and retained earnings went up. So retained earnings, we know, is actually two pieces. Retained earnings is 136 up, and if there's any dividends, and there are, dividends down. So those two numbers net together to be 47,000. 136 minus 89. 47,000. So that explains the $47,000 change increase in retained earnings. It went up by 136 for net income, and then it came down by 89 for dividends paid. Dividends paid is going to be a financing adjustment. Dividends paid. And then let's look at the common stock and paid in capital. Here it says we issued shares for $5 each. 12,000 times $5 is $60,000. So we brought in $60,000. That got split between the common stock account because it's par value $2. So 2 times 12,000 shares is 24,000. Common stock went up by 24,000, and all the rest of it went into paid in capital in excess. So that also is in our financing section. $60,000 cash received from issuing stock. We net those numbers together, and we've got a net decrease due to financing activities. And then we pull all three numbers together. 122 up, 36 down, and 29 down. $57,000 net cash increase. And then we compare that to our income statement, and yep, that's what we show. 57,000 net cash. Ooh, decrease or increase? Net increase. What did I do here? Oh, that's I just wrote it wrong. That should be a net increase. I'm glad I went back and checked my proof. So we feel good. There is the cash flow statement for the second one. And I know this is tough. We're going through it very quickly. The textbook has covered more than what we really need in this class. What you absolutely want to make sure you know is the Plicker questions that we went through. Those 3 Plicker questions that were back to back to back that talked about if operating is this and investing is this and the total change is that, then what's financing? Or if this is operating and this is investing and this is financing, then what's the total change in cash? Make sure you have that stuff down. Also, make sure you understand that that changes in accounts receivable is operating, or if we receive cash payments from customers, that's operating. That when we issue stock, that is financing. If we sell a piece of equipment, that is investing. Make sure you have those pieces down. The rest of this stuff that we covered, you're going to need it for the homework. Like this is homework here, but it's not going to be on the exam. So I'm not going to ask you to calculate or create cash flow statements for the exam.